As we look at the monthly, besides a black swan, what do the bears have left to stop this market from moving higher? Let's go. With a cool PCE print this morning and CPI and PPI in the rearview mirror, only once bears flip to bulls will this end. Let's face it, if Ron Walker ends up explaining how he's FOMOing in at the top, then that's when I'll stop taking trades. Otherwise, if you aren't long, then you're wrong. Now you'll notice that I went ahead and I zoomed out a bit. And many people have been drawing this trend line that connects back to the year 2000, and then it came up through here in January of 22, and then they've been showing it coming up into here and price just slamming into this trend line. So let's talk about this for a moment because I want to talk about how this isn't exactly correct. And after we go through this, we'll also talk a little bit more about how some of the other indicators look. Now, whenever looking at price, and it's gone from about $150 up to $450, the one thing that you have to do when you consider this is you need to use log scale. So in TradingView, if we go down to the corner and we click that little button there and we click logarithmic, you'll see here that we kind of get a different look. Now this time, zooming back in, if I go ahead and I add a fib-based extension here, and without going through a whole lot of detail of where I started it, but essentially it was based on wave counts and where they ended. One thing I had discussed before was the possibility, and I was almost really joking about it, saying that it could go up into this 1.618 area, which is a wave extension that you would see for the third wave. So this was essentially like the first wave. We had a second wave with a pullback, and then we were in this third wave. And I said, well, after we broke out of the one area, that we were likely in this monthly area either to reject from here, put in some type of pullback or other corrective wave, or I didn't think it was really possible at the time, but anything's really possible when it comes to the market, was that we could come up into this area, which would be the next fib level that you'd likely hit, which was around the 530 area. You'll also notice here that when we put this in log scale, this trend line also becomes some type of overhead resistance. So many people discussing how we slammed into the trend line right here and that we're going to automatically reverse. We got to look at this according to log. And you'll notice for a seasonally weak period, we were actually up over 5% this month. So that is craziness because usually the latter half of February is seasonally weak. And you'll notice here that we actually did this on less than average volume. And at this point, this MACD isn't really showing any signs of weakness. In fact, if anything, it's showing strength. But one thing I do want to point out here is if we look at this light blue line, which is the upper Bollinger Band, and this will expand going into next month. But one thing we notice here is that we did close outside of that Bollinger Band. But being that we're really in a blow off top situation, there's no reason why we couldn't just continue to behave irrationally and spike into this 530 area. When we look at this distance from the 20 simple moving average to the 5 exponential moving average, one thing that we see here is that we are getting quite extended. But at this point, we're increasing that distance. So it isn't like necessarily all of a sudden we're seeing some type of trend reversal, and we haven't seen any type of candle structure up here that would make us think that we're reversing from a monthly perspective. So right now this chart is screaming full bull. Going ahead and looking now over at the NASDAQ monthly, what we see here is pretty much identical except for one thing here. If we look at this upper Bollinger Band here, we can actually see that we're closing within that upper Bollinger Band. So this doesn't look quite as overextended as the S&P 500. And knowing that this upper Bollinger Band will once go ahead and expand going into next month, this still would give room for a price to go ahead and yet move higher. And if we flip over to the small caps, when the small caps start to look this good, you start to worry that maybe some type of black swan can hit us. But that's all the bears can pretty much count on at this point. If we look at this resistance in this area, we are now trading above that. And when we look at this, this is extremely bullish because we've been essentially accumulating for about 2 years now. And the fact now that we broke above this resistance area, if the Russell starts getting it together and is going higher along with the Qs and the S&P, this rally may have just begun, especially when you look at the volume that this has been being bought with. Another thing, all you hear people keep talking about is that this market is irrational. And again, you know, where I would get worried is when they say, hey, I just flipped my bull hat on and they're going to FOMO in at the end. That is where I would get worried about a potential pullback. But right now, until we see something like that happen, this market is full bull. Now, if we look at the US 10Y yields and we look at this candle here, you'll notice that we were up quite a bit this month. In fact, we were up over 8%. So this means if we go ahead and look over at the monthly of TLT, which is essentially the inverse of that, we see an inverse left shoulder with our head right here. And then you'd hope that this area, which is pretty close to lining up with this, that this would be a potential good entry for bonds. Let's face it, if they're going to be going ahead and cutting the interest rates, that will favor the bonds. And so maybe finally now we have gone through some type of bottoming process here. I wouldn't be surprised if we did something like this to go ahead and accumulate a little bit more, maybe drop it for a spring and then go. The VIX went ahead and got crushed this month, and I was happy to see this tail candle get rejected by this purple line, which is the 200 daily simple moving average. And of course, if you're swing trading, we never mind if this thing just continues to head lower. Of course, all this leads me to where we're at today. With all the bearish excuses out of the way, the only thing left for this to find its top is once something pops in unexpectedly. Until then, I'm taking trades. I have 70 signals that I signal on, and 50 of them are open right now, with the average winner up about 4% and the average loser down less than 1%. If you're having trouble getting into trades, then join the Discord for only $5 per month. As that's all I have for now until the next video, and we'll see you then.